What's up, guys? It's Rocky or Vincent, and I want to do a Rocky recap for you all on ticker symbol Pepsi, ticker symbol PEP. This is a swing trade that I took, and it only took me just a handful of days to get over 100% return on 2 month out contracts. I just want to explain the chart, the thesis, the execution, things like that. Apologize, it's been a minute since I posted. I've been sick recently. I was traveling. I've been working really hard at my job. I trade commodities, so busy season, but very productive time of the year. And I've been training well, so I'm excited to just showcase how I've been doing it, what I saw, and the outcome of all this. So let's go ahead and dive into the chart. Now, I posted my chart on Twitter. I always post my charts on Twitter, followed with the thesis, and then after all that, I usually post the results. Win or lose, I always want to just make sure I go back and see what I did right, and if I'm wrong, what I did wrong, learn from it, and that's how you get better. So I have this simple triple bottom pattern here. You probably heard of things like the double bottom, triple bottom, things like that. Typically, it's just when a stock's at support, and it's called a double or triple bottom for a reason because there's been multiple times this stock has shown support at this level and what I have drawn out. So you can see I have these like green accumulation little bubbles or circles, and every single time Pepsi's been in this level, in this little range, right? You've seen a lot of accumulation. Accumulation, stock rips $5-10. Accumulation, stock rips $5-10. Sees a $25-30 rally in about 2 weeks. And here, this is where I got long. So I long Pepsi at about 156.50, 157, risking about $1 close below. So if we get a daily close below 155.90, this double bottom, triple bottom is completely invalidated. I'm out. Now, if we go to the weekly chart, you just look. Historically, this has been a pretty strong area. We've seen accumulation here in 2022. Saw it here in 2023. Got a tap of 158 and a bounce. So every single time we see a bounce, typically on Pepsi here. Now, one of the reasons why Pepsi sold off in the first place is because, as we know, Trump won the presidential election, and RFK is his nominee for the health department. He's been very critical of companies like Coca-Cola, McDonald's, Pepsi, companies that do make a lot of money but have, some things in their products that can cause a lot of controversy and health issues. So I think that's why we saw that fear in the beginning. As you can see, this $12, $15 sell-off, which is actually pretty big for a boomer stock. But I went long the January calls, and just after like a day or two. I mean, I was able to get 35%, which was really good. And I sold about a third of my position. I sold the rest today for about 100%. And this was a really nice trade, really stress free. I knew my risk. The IV was low, so that means I don't need as big of a move. Like, it moved $2, $3, I was up 50%. You get a $6 move, bam, you're up 100%. Huge buying volume into support. The thesis checked out. The risk reward checked out. We're in a bull market. All dips are getting bought. And this is pretty textbook. We come back to support. I'm willing to long something at support and know that my risk is tight. Knowing my reward potential is high, and now we're magneting back to those EMAs. So I'm out of this trade for now, but this was a really good, really clean example of just buying at support. And playing a good risk reward trade. So I hope you guys enjoyed this recap. If you did, drop me a like, drop me a follow, and I appreciate you all supporting me. Catch you guys in the next recap.